a great pleasure to have Ananth with us. So he had actually come and spoken to the previous batch of students on informal finance and all that, and since the presentation was so interesting, we thought we should ask Ananth to come again. And the other context is that because after demonetization, he's done some work on the impact of demonetization on informal finance. And so the present talk is actually going to be about informal finance itself. And Ananth is now an independent researcher working in Vijayawada. And previously he was at Andhra Royal College for about 17 years or so. And currently he works on informal finance, role of technology on informal finance. So welcome Ananth.
Thank you, Alex.
Thank you. It's a great pleasure to be here. What I'll do is first it's actually split into 3 different parts, so I'll quickly try to cover as much ground as possible. So to start off, this is a very interesting quote that's there about the borrower's mentality in India, and this has been there from a long time. So, you'll keep coming across large-scale defaults, people getting beaten up, all kinds of issues. So, and now that we look at if you look at the lending sphere, all kinds of lending, formal or informal, there's so much talk about non-performing assets, defaults, and so on. You start with the biggest borrowers to the microfinance borrowers, all of them seem to be under stress. So what you have to keep in mind is that large-scale borrowing, people getting into trouble, is not new for us in India, or for that matter in most parts of the world. Debt has been there for nearly 5,000 years. So it's common for people to borrow recklessly and lenders to lend recklessly. Now, if you look at informal finance, the interesting part of it is you don't have any consensus on the definition. So based on the person, the perspective that they have, the worldview they have, they look at it in different angles. So and if you look at informal finance, let's not think about it only in terms of credit. Credit is the most high profile of them. It's the largest segment, but you have so many segments to finance, or even for that matter, formal financial services. So there's so many types of services that broadly are referred to as the financial sector. It's no different even in the case of informal finance. So you have credit, savings, insurance, all kind remittances, all of them put together will comprise of what we call the informal finance. And in each and every sphere, you have some sort of informal activity. So the size, the quantum of that informal activity obviously varies. So that's what we have to keep in mind. And almost always, whenever you look at various kinds of literature, or even the official pronouncements that keep coming in, which came in after demonetization, we tend to look at it very often in simplistic binaries. It's good, bad, legal, illegal. But then it's not so simple when you go out into the field and start looking at it, because what I'll be giving you about, what I'll be talking about today is mostly what I have seen the way it operates for a very long time. So I'm going to put all that together and give you mostly a perspective on the operational aspects of it. So of course, officially or theoretically, it might have to be better, or we might think that it should be better, but we're not bothered about what it should be, rather than we're going to look at what it happens or how it operates. And therefore, when you look at informal finance, you have to be a little bit cautious, or you have to be very careful when you look at it. So often you'll come across people who say this whole informal finance is bad. Like if you see the Indian policy documents that you have of the government right from the beginning, right from the Agricultural Credit Survey in 1952, there is thought informal finance is all pervasive in India, and the solution that they had was you expand the scope of formal banking sector. And the assumption was that as the formal banking sector expands, the informal sector will slowly fade away or vanish or whatever it is. And as a part of that, the nationalization process, then today that's been extended further, and now they're talking about banks going to the villages, establishing the business correspondent model. But does that mean that the informal sector has vanished? No, it's grown. Obviously, we tend to think that the informal sector has actually declined, but then what has happened is, if you compare it to say last 20 years, I personally believe that the informal sector has grown over the past 20 years, but the difference is that the formal sector has grown much faster. So that's why when you look at the broad overall statistics, you might come to the conclusion that informal sector has declined. Might have declined in a broad percentage basis, but then if you see the quantum of informal finance involved, the number of people it now affects, the way it has changed, all that has actually grown rather than declined as such. But it doesn't mean that informal sector in all segments have grown. So there are certain segments which are growing, certain segments which are slowly fading away, and certain new segments where they are coming up all over again. So when you look at the informal sector, this is what you keep coming across. It's an illegal offshoot or something that's some sort of a sub-economy, something that is needed. All these are what you always have, and we often tend to believe that the best solution to the problem is to expand the formal sector. But then one thing that you have to keep in mind is that formal need not always be better than informal, and it need not always be good. So there you have both the cases. So I thought that's something that you have to keep on looking at. Okay. So this is an interesting picture from a newspaper clipping. It is the picture of Pranab Mukherjee, who was then the Commerce Minister, now the President of India. He was inaugurating an illegal stock exchange in Vijayawada. Now when I say illegal stock exchange, please do not think it was some sort of an underground organization. It is clearly forbidden under the Securities Contract Act 1952, because all these securities are supposed to be traded only in a stock exchange recognized by the government. These stock exchanges, this is the early 90s phenomena, they lasted till around 94, and in all there were 22 illegal stock exchanges in India, and Vijayawada had 5 of them. So, and the interesting part is, they were the centers of economic activity. Everybody knew where the stock exchange, like right at that time rickshaws were prevalent, not the auto rickshaw. So you could come to Vijayawada and ask a rickshaw guy and he would take you to the stock exchange. So that's the kind of, that's how, and they were quite large by the way. This particular stock exchange that he was opening went on to become the 4th largest exchange in India. First was Bombay, then Delhi, and then Madras. At that time they were known as Madras and Bombay. So after that, so this was the 4th largest exchange in India with a turnover in 93 of around 3,500 crores, which was a very large amount at that time. So this is, so the interesting part of it is, like this went on to become a very big issue and so on and so forth. And this photo, I mean the claim that the people wanted for recognition as an official stock exchange was, in all the memorandums that they submitted, they actually submitted some memorandum saying that our stock exchange was inaugurated by the Commerce Minister. So it's like all the government documents actually had that statement. And this is another one. This is a photo that I came across in Twitter. So obviously now he's a minister. At that time he was an opposition MP. And Sahara, because we all know that that guy is now, he's going in and out of the jail because he's not been able to pay the bail money. And Sahara is again an excellent case of something like the illegal deposit collection activity that takes place. So, but is Sahara, what is it, formal or informal? What is it supposed to be? It's difficult to define because it is a company that collected deposits illegally. So look at the gray area. That, so Sahara is a legal entity, but they have undertaken illegal activities, and the whole thing that they operated was an illegal thing. Of course, now it's now considered illegal. At that time, it was considered to be different. So if you look at now, if somebody like so, this is again very, very indicative of the complex relationship that you have between formal and informal. So it's like often a line in the sand. So, and it keeps changing. I mean, it keeps moving, expanding this way and that way. So I think that's what you have to be very cautious about. Now, very broadly, to simplify the whole thing. In fact, this is probably the most formal distinction that you have because it is from the ILO report. So what is in informal sector always is marked by very low entry barriers, the ease of entry, can start anything, whereas if you contrast it with the formal sector, it's slightly more difficult. There are a lot of regulations. Of course, the number of regulations varies across the countries or sectors and so on. So then it's always considered, it's always unregistered, unregulated. So like Sahara case would again be difficult to classify because it's registered but it was unregulated. So that's the complexity that comes in. Then in almost all the cases, all these informal markets are extremely competitive markets. It's always family based or individual family labor that is very important, and that's what actually allows them to sustain themselves. And most of the time they often revolve around their ability to mobilize networks, social networks, to help them in the business activity. And then look at the limited scale of activity that you have. We've never come across an informal business that operates in multiple cities. We don't often come across, not never, sorry. We don't often come across same informal business operated in multiple cities. Of course, it's there. I'm not saying it doesn't exist, but it's difficult. It's not always, it's very, very rarely do you have those operations. But it does exist in the past, like this Hundi system was completely an informal kind of network that operated in different cities based on family ties. So the social acceptability that is there is extremely high, and the familiarity among participants. These are the important features that you generally come across in all the places. And contrast it with the formal sector, the large scale of operations, the structured form of ownership, structured organization, all that is where it comes in. And now increasingly they are also looking at taxation and regulation. So these are considered to be two important issues, but again they are difficult issues you have to look at. Okay. Now these are the features of informal finance that we keep coming across. So when you look at the informal sector, informal finance, try to contrast it with different segments that you have. Say money lending. Again, when I say money lending, there are so many different segments in money lending. So don't take money lending as to be one homogeneous kind of an activity. So we'll come to that later on. So look at the unregulated activity. Illegal is also a part of it, but then that again is an interesting aspect, because a lot of finance sector firms, even if they are registered bodies, regulated NBFCs which are under the purview of RBI, tend to have business practices which tend to take up business practices that are in direct contravention of the law. So that's the interesting aspect. Then it's always thought to be small economies, what is also called penny economies by an anthropologist, Bauman, or bazaar economy as it's been referred to. But we have to keep in mind very often, especially in the recent years, informal sector is very much linked to the formal sector. Do not think that the informal sector is something autonomous and the formal sector is something autonomous. They operate in silos and so on. There is frequent interaction between the two sectors. Like for example, the best example that I can give you is, the informal lenders who use online transfers to collect their dues, and an even better example is gold loans. So, or for that matter, you take bank loans. Now, one thing about credit, which is now increasingly being accepted, is very, very rarely, among very, very few borrowers, do you have cases where the end use is the stated use of the loan. So you have, like for example, if a family or even if a company borrows say 10 lakhs, or let's take this case, if a family borrows 1 lakh, then it's likely that the family will use that 1 lakh for 3 or 4 different purposes. But in the application, they might simply say, we are going to use it for one particular activity. Say, buy a lorry. So if they're going to take a 5 lakh loan, doesn't, especially if the loan has been disbursed to their account, it doesn't mean that the withdrawal will go, all of it will go into paying for the lorry. Might or might not. So most of the time it does not. And a lot of it actually goes into consumption purposes. So that's what we have to keep in mind. And look at gold loans. They come from the formal sector, or like for example from banks or NBFCs, and how are they used? It might be onward money lending to repay a loan from a money lender. Purpose can be completely different. So let's, so in fact if you see in recent times, one of the issue that has attracted the attention of the policymakers is what kind of transmission takes place from the formal to the informal and vice versa. So that's an important issue. So let's not look at being autonomous as some sort of an issue. It's highly socially acceptable. Might be illegal, but very much acceptable. Like money lending, like daily finance as they call it. It's supposed to be against the law. It's not allowed, so on and so forth. But does it exist? It exists in almost all the cities. In fact, in all the rural areas also. So I think that's the important part. And it draws on legal and illegal practices. Need not always, informal finance need not always be illegal. So we have to keep that in mind. Okay. And the very interesting part, which is something that's been increasing in the last couple of years, is again it's not, they do not operate in silos that are autonomous of each other. People can be simultaneous consumers of formal and informal services, or they can also be consumers of formal finance and providers in the informal segment. So that's the interesting aspect. Like for example, a bank loan, a money lender might pledge his or her jewelry to the bank, take money from the formal sector, from a bank, and he or she might be lending it to somebody else in the informal sector. So is that strictly formal or informal? It's kind of both. It's a gray area, I mean overlapping that's going on, and this has especially increased in the last couple of years, or especially last 10-15 years. Okay. So some of these providers simply did not exist say 20 years ago, formal or informal sector. So that's the interesting part. And then almost all the informal players, what is it's a characteristic feature is that they have very flexible business practices. So it's not, there's no steadfast rule that they have. In fact, rules are always something that keep on evolving based on the business exigencies. Like they might beat up one borrower, but they might go to the next borrower and say, okay, fine, you can't pay, repay me tomorrow, but additional interest and so on. So that's something that's always there. In contrast, if you look at the formals, yeah, please. Compulsions, business compulsions that come up. So when you look at what happens is in this, their practices keep on changing. In contrast, if you go to a formal sector, because they're so structured and so on, the manner in which they're structured, they're organized, they might simply say the rules will not accept it. Like for example, postponement of payment. So if you go to a local financier, he might say, okay, fine, okay, we had a cyclone or whatever storm or whatever floods it is, I'll not collect my loan for 1 month. Like demonetization. What did money lenders do? Very simply they said, we'll not collect our loans, but you have to repay them later, and we'll talk about the interest component, penal interest component later on. So for 1 month or so, they just didn't collect their loans. They didn't even go there. They didn't even go to the borrowers. Of course, they might have just gone as a general survey kind of thing. In fact, some of the money lenders from like Vijayawada, a lot of them actually came to Bangalore because they were worried that there would be all sorts of pressure if they were back in Vijayawada during demonetization as well as during the call money time. Why? They claimed they were on a holiday in Bangalore. So obviously for a lot of people from AP and Telangana, Bangalore is a holiday location when they're in trouble. So, so it's constantly undergoing change. So it's so dynamic. Obviously, I mean, it's a business, so, and businesses are constantly adapting, they're changing based on various external and internal factors, impacts that keep coming in. Okay. And then, but look at lending. If you just take a step back and look at lending, it's existed for centuries, like 5,000 years or something. And there have always been sufficient references to debt, runa, run, whatever you call it. And it's only, you know, right from the time of the British that the whole, even the British, their attitude used to vary. It was good, bad. We should intervene, not intervene. Whenever they, especially after 1875 Deccan riots, it starts, you know, they start becoming more and more cautious because they were more interested in the administrative aspect. Okay, so I'll just quickly skip through it. And in fact, by the way, even to this day, there is no rule except in the case of MFI borrowing which says this is the maximum interest that is chargeable. There is no rule, constitutionally written rule or no RBI rule as such. Generally, we consider 24%, and it started with the British declaring that. So previously, historically, or even for that matter, even today among informal finances, what is important is the justified rate of interest. So Dharam Vaddi as they called it, or Dharam Reddy as it was also known as. But it was the British who actually declared very, very clearly, you know, 24% was the maximum that you could collect. That too, there was a limitation. At that time, it was 100 rupees. 100 rupees was the point. Below 100, you could charge 12%. Above that, below 100 was 24, and above that was 12%. So that's broadly they followed it. I think it was the income tax authorities who said it can't exceed more than 24%. That's how most of the time 24% is now, especially in the informal sector, considered to be some sort of a justified rate of interest that they can charge. Of course, now not many informal sector lenders will give you money at 24% per annum. This, when I say 24%, it's per annum. So that's the regulatory aspect that you have. So even to this, except in the microfinance, it was only after the microfinance case when RBI said 30% is the max, 28% is the maximum, we'll allow. Beyond that, it's not allowed. Okay. And then if you look back, it's always drawn the attention of policy makers. One of the important thing, in fact the best report strongly recommended is you should read this Nicholson report. Nicholson was the collector of Ananthapur district, and he has written a report on the land banks in which he has dealt in exhaustive detail about this money lending in the Madras presidency. A lot of factors that he talks about are valid even to this day. Like for example, a large part of lending that happens by local farmers. Even to this day, if you see informal finance, which is the biggest source of money that people borrow, if you see, it's friends and family. So it's not changed much over the years. Of course, now you have money lenders who have come in. Under our NSSO reports, they are referred to as professional money lenders. So that's the classification, the official classification that they have. So he talks about 9 different categories, 14 different purposes for which credit was taken, and he's talking about 1895. So you can just look at it. Again, like in the present, repaying old loans, borrowing for old loans, borrowing to repay old loans was an important purpose. Okay. So yeah. Now if you look at this, what is the size of the informal market? Can we take a guess? It's very difficult because even the government doesn't have an estimate. They don't even have an approximate estimate. So everybody just gives talking about approximation. So it could be a couple of lakhs of crores. So that's how it is. So the easiest way you can try to gauge this huge size or to understand the extent is, I think it was around 2013 or 14, CBI director said that his organization was looking at cases that involved 80,000 crores. And that was across some, I think it was across 18 or 12 different companies that he talked about. That was only those that he was talking, that his organization was looking at, not the rest. So you could look at the size of what kind of this thing exists, because you have all over the country, you have various people who have collected illegal deposits known as daily collections or daily deposits, and they number in AP and Telangana, I think they numbered around 8,000 crores or more. So, and then look at the lending side. in couple of months ago, last year in fact, they had what was known as call money problem in Vijayawada. Call money is not to be confused with the interbank call money, but it is called call money because you can literally phone the money lender and he'll come and get you. It's one phone call away. So that's why they call it call money, and that name is stuck for a long time. Now it's a form of daily finance, lending on a daily basis where the interest, the principal and interest is collected at the end of the day. That's the simplest form. The interest rates are usually 10% per day, and when the loan is given, the interest is deducted upfront. So for example, if they are borrowing 1000 rupees, if somebody is borrowing 1000 rupees a day, 100 rupees will be deducted. The lender will give that balance 900 rupees in the morning. In the evening or night, say around between 6:30 to 9:30 in the evening time, the lender comes and collects 1000 rupees. That's how it operates. So next day morning, the whole cycle starts again. So it's like, so what happened is, in the case of Vijayawada city, it started with Vijayawada and then slowly spread to other parts of Andhra Pradesh and Telangana. Now in certain cases, borrowers could not pay the loan. Usually, most of the time, if the principal amount lent is small amount, say 5,000-10,000 rupees, there is no collateral required. But in cases where the amounts are large, say above 1 lakh, then they require some form of collateral, whether property, gold, anything, something has to be pledged. Pledge means not a direct mortgage pledge. Sometimes the pledge can simply mean you hand over the original documents of your house or something to the lender and they'll give you money. After you repay it, it comes back. Of course, that again changes. So when the borrowers could not repay the loans, there were some lenders who started demanding that women borrowers had to give them sexual favors, or they would simply grab away whatever property was pledged at the slightest case of trouble. So then finally somebody went to police and then the police cracked down. Ultimately, it was estimated, not ultimately, sorry, at the peak, it was estimated that in Vijayawada city alone, the amount of money that was lent as call money could be as high as 4,000 to 5,000 crores. And the interesting part, people who were lending in Vijayawada city were money lenders who had come from 2 or 3 surrounding districts. They would come and lend money there. So that's how these people would operate. So that's the size of this thing that you have. So broadly, this is how it operates. If you look at it, very flexible. It's a customized product. Like if you have a business proposition, if the lender believes you, then they are willing to lend any amount and any kind of loan product. You can negotiate the tenure, the amount of money, your repayment schedule, everything can be negotiated. But what is difficult to understand is you have to understand what are the risks, how is it transmitted to the formal and between the formal and informal sector. And the interesting aspect is, what is fascinating about informal finance is, a lot of cases, these people actually start nurturing and creating a market. Then as the market size grows, invariably the larger players, organized players, the formal players start moving in and the informal players usually exit. Like for example, if you look at all the sectors that I have mentioned, like auto rickshaw funding, somewhere around 2002, in some of the cities, it was these informal lenders who started lending to people to buy auto rickshaws, because auto rickshaws were slowly replacing the cycle rickshaws and nobody could find money for that. So it was these. Or a lot of illegal businesses, like for example, if you go into the smaller cities, businesses that are unregistered, which carry on, which help smugglers and so on and so forth. Don't think the smugglers are putting all their money unless the guy is really large. They are often borrowing from informal finances. So that's the kind of trend. And the recent trend in the last couple of years, the last 2 years in fact, a lot of them are now moving into financing these agricultural commodities. So that's a new trend. That's something that didn't exist some years ago. Okay, so now what's important is, apart from flexibility, now who should get a loan? All these are issues that are dependent very much on the individual lender and the borrower. It varies, they have the wide variations. So who should get a loan, what kind of appraisal mechanism should be followed. If you go to a bank, they'll probably have some 20 different criteria or 10 criteria, whatever it is. But in the case of these informal lenders, often what happens is it's always culturally loaded. Can I give X money? If I give X money, what is the possibility that this X would not only not repay his loan, but would get some of his community members, and there will be other issues. All these are factors that keep coming in. Or does X deserve it? Like I remember talking to a very old informal lender, and he says in the olden days, especially in the 1920s, 30s and 40s, one of the mechanism that people used, especially in the rural areas, was they would see how much water a borrower would use as soon as, because it's not very often, not all the villages had money lenders. You had to go some distance. So the first thing the money lender, it seems, used to tell them is go wash your feet. So if the borrower uses too much water, then they would not give the guy a loan, because they think, if he is using something that's as precious as water, this was the pre-irrigation times in most of the places. If he is using water, so liberally, so carelessly, then there is a high possibility that this guy will not repay my loan. So they would not give. And then there was another financier in the 1990s, who did a lot of business in the 1990s. So how do you give a person a loan? What he would say is, I would always see if the borrower is bargaining about the interest rate or no. So that was a simple criteria that he had. He says the guys who don't want to repay the loan will never borrow about interest rate. The more sincere of the lot will actually haggle with the interest rate, saying I can't pay this much, so you reduce it and so on. So these are the kinds of mechanisms that exist. Probably no bank would even think about it. So that's how it varies. So despite the fact that this is all in what we call informal, there is documentation. It's all legally acceptable documentation. Like for example, a lot of them take promissory notes, blank checks, which is again not allowed, but they take it. Now the interesting part, in recent years, you have the entry of people who are the state actors, state agencies. This never happened in the 1990s. So in recent years, you have a problem, they are now going to the police, not the court. So that's the interesting change that's come in. Very importantly, last couple of years, this blurring of lines between formal and informal is something that's been increasing in a very, very large scale. So the fascinating thing is what I find this particular aspect, where small and medium companies are borrowing from the formal sector and concurrently also borrowing from the informal sector. So even listed companies, like Hyderabad based listed companies, many of them have loans from the informal sector, which is always taken in, which is accounted for as loans borrowed from directors. So that's the kind of thing that you have. Okay, so the rest of them are general specs. Here, look at the kinds of informal businesses that you have. It's tens and tens of them, and it's like I said, you have a business proposition, and invariably you will definitely find a lender who can build a business model around it. And these are generally prevalent practices, that kinds of finance that you call, that they're always general finance. Anybody can be lent, and not only anybody can be lent, the activity can be taken up for any kind of, the money can be used for any kind of activity. Now what is very interesting in informal finance is, very often, most of the time, the financiers tend to specialize in certain kinds of businesses or operations, kind of activities. Very rarely do you find financiers who will be lending for all these kind of activities. No, it's usually a specialized kind of activity. Like for example, a person who lends money on a daily basis will never lend to a person who wants to pay the interest on a monthly basis. Similarly, a person who lends only to businesses will never lend it to an individual borrower who does not have a business. Like I've met money lenders who lend on a daily basis and who lend only if you have a shop. It doesn't matter even if it is just a small kiosk that you have, but you need to have a shop. So they say even if a person has 50 acres of land, I will never lend because they don't have shop. Why? A person who has a shop, if he is going to repay me on a daily basis, he has the money that keeps on circulating. There is some money that comes, there is a cash flow that's there. Whereas for a landowner, he might have a lot of land, but there is no daily cash flow that's there. So that's the kind of importance that's the kind of activity that they take. Most often there is no collateral for many of the loans, but in recent years the larger loans they are taking in a lot of collateral. So that's the thing. Now these are a lot of issues that you can keep coming across. There's more, in fact, the more I talk about informal finance, the more questions I start having. So can consumers be protected? Now who should protect the consumers? Now how should that be done? So can the informal be formalized? Okay. Can banks fund informal lenders? In fact, this whole question is something that keeps coming, that has constantly come back in the last 10 years. RBI had a report where they were trying to look at banks funding of the informal lenders. This was 10 years ago. Will that lead to lower rates? That's the interesting question that you can keep asking. Okay? And look at the changes that have come in the last 2 decades. Now last 2 decades, the fascinating thing that's happened in the financial sector is that you have had people borrowing much more money, and the financial service providers have also increased, not only in number, but the type of financial service providers have proliferated. Like 20 years ago, 25, 30 years ago, getting a housing loan was impossible. Or not impossible, but very, very difficult. Now, housing loan is one phone call away. Similarly, a vehicle loan. Now you have loans for look at the consumer lending that's increased. Consumer lending is something that didn't exist 25 years ago. Like in the 1980s, the status of the bank manager, public sector bank manager, was next only to the district collector. So that's the kind of importance that the banks had. Now that's all that has changed. Okay, so gold loan companies didn't exist 15 years ago. Now they're so important. Okay, so now what is very interesting is the second point that I've mentioned. There is large scale formalization taking place, where the formal sectors have spread to different businesses, and in certain cases there is informalization that is taking place, where the formal sector companies are closing down and the promoters are actually taking up exactly the same business in unregistered forms. Like a good case of formalization is gold loans, and a very good case of informalization is chit funds. So the formal sector chit fund companies have been gradually closing down. The number of chit fund companies has declined over the last 20 years. But at the same time, if you look at any city, informal chit funds have actually increased in operation and the size. Today, you have informal chit funds from say 10,000 rupees to 1 crore size. That's the kind of chit funds that you have. Okay. So you have the rise of this high cost call money that you have. Fascinatingly and interestingly, increasing number of people who in the informal sector are demanding that there should be that large sums require collateral. This never happened say 20 years ago. Okay. Now you go to some of these rural areas like Kurnool, you have unregistered people who call themselves finance companies who are lending small amounts of money. Previously 10 to 50,000 was the kind of money that was lent by the local village money lender or by an MFI. And they are flexible. If you want weekly payments, they will give you weekly, or repayments weekly or monthly, whichever way you look at it. Okay. Now formalization, we don't have much time, so I'll quickly rush through it. Formalization is something that's come right back into the debate in recent times, especially with demonetization. It's a continuous process. It's nothing new. It's happened right from independence. That's been the push, and it's a constant process. So let's not think it's something that started off recently. Like in the banking sector, the two sectors which are now gradually in the midst of formalization is the business correspondent model and the loan recovery business, both of which you never had the business correspondent model 10 years ago, but now that's slowly started. Now loan recovery was something that individual agents would take up in the past. Now there are corporate entities that have entered, they are looking at it. So if you look at, in this particular context of this thing, look at demonetization. These are general details which you can get all over the place, and we are lucky because we've seen this whole process, span out over a period of time. So I think students, it becomes very interesting. Now, what is particularly this presentation will be there. So the impact of demonetization is more difficult. It also becomes very, very political, like many other aspects, because one side you have government claiming one thing, and then if you start looking at statistics, you come across some completely different scenario. Now this is a question that I couldn't understand. Now because India imports a lot of petroleum products, now you are talking about a large decrease in petroleum consumption, and we don't store petroleum products. We don't have that kind of thing. So how can that be? So you be the best judge. So now these are the questions that will come to our mind immediately when we look at demonetization, probably something that you could think about. Now what's happening in the field is completely different from the hope of cashless or cash. When there was no cash, the transactions increase, but with cash coming back into the system, in most of the places what we find is they're going back to cash. So what's the net impact of that? We don't know. What I think, for me, if I look at demonetization, I think the lasting impact that will be there is that there will be a boost to the electronic payment infrastructure rather than anything else. I don't think it's going to do anything to black money, because I was talking to some people and they said the money laundering business has actually increased rather than decreased. So these are guys who take black money, take it out through the corporate route, and then they give back white money for a commission. That's actually increased rather than decreased. So that's an interesting aspect that you have for this. But the infrastructure, that is the card infrastructure, the POS machines, all that is increasing, and of course it depends, it needs to be seen whether it will keep on increasing, or at some point it becomes very unprofitable for a merchant to actually use this infrastructure. So they are going to turn away customers saying, no, if you are going to use a card, I will not pay. I will not sell you my goods. So that's also happen, or we are close to a point where that might happen. So will it lead to a reduction in the informal sector? I'm not very sure. I don't think. I think if you see the history of the informal sector the last couple of years, informal sector players will reinvent their practices, and invariably a lot of them actually use technology for their use, so to help them in their business. So I don't think it's actually going to do anything to reduce the size of the informal sector in any meaningful way. Of course you might have a percentage or 2% decrease in informal sector in the short term, but how it sustains over a long period of time, I really doubt it. So what will be the impact on prices and wages? Will it lead to better compliance, where you don't need, or as they're now saying, tax terrorism, where there doesn't have to be tax terrorism, where income tax authorities have to go in and start forcing everybody. So will that actually help? Will that now take place? Now will electronic transactions, is the government pressure sufficient to force a behavioral change among Indians? I don't think so, because especially if you look at ATM rollout, it took nearly 10 to 12 years for the increased use of ATMs. Now for us, we use ATMs so easily, but rewind to 2000, 2002, not many people use ATMs, though their cards were given free of cost. Today they're charging us for a card. I think 450 or something they charge us, or 250 per year. Yeah, there is a charge. So in those days it was free. They used to say, take your debit card free, we will not charge you anything to take it, and so on and so forth. But people didn't use it. So I think these are the for me, I think these would be the interesting parameters to watch, especially in the context of demonetization. Okay. This statistics might interest you. This is what I had till 19th. Look at the sharp jump you have and then the tapering off. So March might at best be the equivalent, or it might be a little more than February, because what usually happens is electronic transactions jump at the end of the financial year. In the last month of the year, they somehow jump. All kinds of electronic transactions. Now if you look at these transactions, they peaked in December when the cash crunch was really acute, and then after that it's been downhill. Okay. So now this is a picture which this is how the informal money lenders, this is the account book, receipt book that they have. They'll take a promissory note, check and so on, and this is how, it's a small book, you know. This is how it, the repayments, the amount repaid and the signature. So the end of the day, the money lender will come, note these details, return the book to the borrower. So the promissory note and the check, or they might not even be check, it's just promissory, couple of promissory notes, never one promissory notes. Usually informal lenders take 2 or 3 or more promissory notes depending on the amounts borrowed. And after the loan is repaid, they return those. They usually return them, of course. So that's how it operates. And there is a logic in taking 2 or 3. One informal financer told me that he takes as many promissory notes and checks as possible. Why? In order to harass a borrower, usually they file cases in different cities. So they take blank promissory notes, which is not allowed by the law. So supposing an informal lender, informal borrower defaults on a loan in Bangalore, one case will be filed here, one in Bangalore, one in one in Mysore. So the problem for the borrower is that he or she has to keep on going to all these courts. So that's this is a pawnbroking, you know. Again, this is one case which has been witnessing some sort of formalization after the entry of gold loan companies. So in fact, gold loan companies themselves could be considered to be some sort of corporate versions of pawnbrokers. So, but with the banks and gold loan companies coming in, the traditional pawnbrokers have been, their business has declined slightly. But so what they have done is reinvented themselves, where they are now catering to borrowers who are not serviced by the other two, by the banks or by the gold loan companies. Like gold loan companies and banks will not lend on silver items. These people will lend even on silver items. In fact, pawnbroker can lend on anything. It's just some item that's pledged. So I came across a pawnbroker who would take a cycle and lend money. So that's one kind of money lending that they would have. So pawnbrokers have certain rules that they have to follow. Okay? Yes. Thank you. Questions?
Yeah, please. I had this thing about the two concepts, informal and illegal, and how they get mapped to each other. So even now when we look at, for example, how the slaughterhouses are being shut down in UP, there is this constant discourse on how they are illegal. And informal and illegal almost map each other in some ways. And you said about the colonial narrative about this and how we continued in some ways after independence, but it seems to be kind of the impatience with anything informal, or it is directly getting mapped with illegal, and how the government is able to, or is targeting these things. that is my larger concern, and that how anything informal, be it, and most of the working classes work in this kind of informal thing. So is it also like, obviously it affects badly to these working classes in previous days. So how do you think that mapping happens, and is there a way to think through that problem?
I think if you talk to policymakers, especially when about money lending, they say yes, it exists. We know that it exists. It is important.
Now the issue for us is, like, how do you reduce the size? Now one of the reasons that they are giving as to why that informal should be reduced is, they believe that the formal sector is now better regulated than the informal sector, so therefore the risks are lower. I mean, that's the assumption that they have, and that's the perception that they have. And therefore for them, and also more importantly, what they think is the formal sector means lower cost of transaction. So for a policy maker, that's what they want. And of course, because if it is better regulated, it also means it is more taxed, or it is better tax, or there is more tax compliance and so on. Now that's the assumption that they have, and that's why they are pushing the whole formal sector. And one of the best, like if you talk to some of the policymakers, what they'll tell you is the best way to reduce the informal sector is to increase the supply of the formal sector. So for the last 20 years, if you've seen the RBI's measures, especially in the financial sector, their thing has been to de-bottleneck the whole supply chain of the formal financial sector. The assumption is, once you start de-bottlenecking it, then it spreads, and therefore the formal sector declines. And that's the assumption. But obviously that's not happening in the field. So they realize it. So but what else can they do other than crack down? So when you talk about cracking down, they very clear, like for example Sahara, or for example some of the other companies, if you go and complain to them, RBI tends to take a decision very, very slowly. The reasoning is, they understand very clearly that the money will not immediately come back. Why? Many times these guys might have spent off the money, or they might have invested somewhere, diverted it here or there. So you have to gradually push them out, that kind of impression that exists. Yes, to your question, if you look at the overall informal business, invariably it tends to hurt the lower classes the most, or they're most impacted by it. And that's probably because the whole formalization process has been rather slow in India. And very importantly, we should not assume that the formal sector itself does not encourage informal businesses, informal components of its business. Like for example, where do these people buy their goods from? Sometimes they might just be looking at the price, the closest supplier, and they might not bother about what the supplier is doing. So, and then look at companies where there are several instances where companies produce say 100 units, or they produce 120 units, but they actually declare only 100 units. So what happens to the other 20 units? They release it in the informal segment. So I think that's something that happens. So I think it's more complex. Very often what I have found is, if the policymakers don't understand it, then the first thing they would try to do is crack down on it, saying this is not allowed. That in turn sets off a chain reaction of disruption that happens, and only when the disruption is so big that it affects the formal sector do they slowly realize that the problem is larger than that. So I think it's a very complex thing, and it's I guess it's, you know, the assumption that formal is better has been there from a long time, and that what carries it carries on and on, and so we tend to assume that the formal sector might be better than informal. So, well, is that the case? Now in the banking sector there is some debate, you know, when you talk about the business correspondents. Now, visiting a bank or banking, going to a branch might not be as easy as people thought, for the simple reason it involves a high cost of transaction. That's what they've realized, and therefore the other solution that they've come up with is send the bank to the village. So that's why you have the outlets expanding and so on. Let's see what happens. But that's a very difficult question to deal with, you know. So how do you optimize the working of the formal sector and reduce the informal sector. I don't think they found any satisfactory answer from a long time. So that's there. Yeah, yes.
I mean, in the start you gave example of autos, and now you are talking about disruption. If there is a technological disruption, like take example of Ola, Uber. So if a person goes, so they will lend them loan, and then you will start earning, and then you will start paying taxes because everything is formalized. So this formalization of informal sector is the magnitude is really different what was there from past 10 years. And the government approach is to connect everyone with the banking. So, I mean, don't you think that, I mean, I don't know exactly, but the technological disruption will actually wipe out informal sector in the near future?
I don't think wipe out, it might reduce to an extent, but what happens supposing, let's take any sector where there will be large scale disruption. So are we going to say that all those, obviously when new technologies come in,
a segment will lose their jobs. That happens. So when we say that when you say technology sector will wipe out the informal sector, you are also assuming that all these people will be absorbed somewhere else. Need not happen. Not all of them will be absorbed. A percentage of them will be absorbed, but a percentage of them will lose their job. So what percentage will happen, you don't know. And then I think one thing that you have to realize is that with one sector, if it witnesses sweeping changes, like take for example autos only. You had cycle rickshaws which were slowly replaced by autos, and now probably in the next 10 years they may be replaced, may or may not be replaced, but accelerate. All those, what happened to all those who who rode these cycle rickshaws? Did they become auto drivers? Some of them went out. So then some of them are absorbed in other sectors. Other sectors need not be another formal sector. No? So that's a problem. We can't assume that just because there is some technological change, that some other formal sector will be built up with the same pace which will absorb everybody. It doesn't happen that way, or it has not happened that far, like that. So what I believe would happen is, what I think based on the historical experience, is that certain segment will be absorbed, certain segments will find their employer. Obviously nobody would want to starve, no? So they will start going and working in somewhere else. Very often where they work might just be another informal sector. So it might happen like the chit fund business. So the formal sector is going away, or like the gold loan business, the formal sector is increasing. So like in gold loan business, like what happened to the pawnbrokers business? Were the pawnbrokers wiped out? Not all. Some of them were wiped out, yes, with the gold loan. Some probably generational change and so on, they went. What did people like this do? They started either giving a slightly larger loan than the officials, than the formal sector. So if the formal sector was lending 2000 rupees per gram, in order to stay competitive, this guy will lend 2100. So a borrower who is looking for more money will come to this person. Then they started lending for silver items, which no company does. So these people tend to change the business model. So that's frequently, I can't explain about Ola and others or Uber, but if you see in the financial sector, like all those who are financing autos, once the larger banks and once the larger NBFCs moved in, these people stopped lending to the auto sector because they couldn't, they were just simply outbid, and then they started lending for the purchase of second hand autos, which the formal sector would not lend. So they would vacate that market, that space, they would find something else. So from autos they went off to bikes, second hand bikes. So it keeps jumping, and now they are going into commodity trade. agricultural commodities, they are financing that trade. So they keep jumping, you know. So there will always be some other sector that opens up. So I think it doesn't happen that there is complete formalization and the informal sector always will be wiped out. There will be a new sector that will be opened up. Maybe because of disruption there is a new sector that comes up which is not catered to, and because these people operate on a smaller scale and because they are more agile. Look at SBI, take SBI and a local money lender. What is the time that it takes for SBI to sanction a loan, and what is the time that it takes a local money lender to sanction a loan? This guy will tell you in 5 minutes. If he wants to give you a loan, he will tell you in 5 minutes, saying, okay, here, take the loan, when do you want? Okay, you don't have, you want money, I don't have it on me now, come, let's go to the ATM. That's what a lot of lenders do. So he'll take you to the nearest ATM, draw money, get a promissory note signed and give you the money. You can't dream of bank manager giving us that quickly, no? This guy will say, okay, today 5 o'clock over, or our server is not working, something if they don't want to give. And even if they want to give, they'll say, okay, it has to go to, very rarely have they instantly given a loan. Even though they can use the discretionary power, they don't use it. Why should I use it? You know, if that fellow defaults, my salary or my pension will be held up that. So I think that's the interesting part with the informal sector. Yeah, please.
So what problems did the illegal money lenders have and how did they evolve?
One business is stopped. Okay, so the money lenders faced a simple question: should we continue to go and force the borrower to pay? When they can't repay the loan, then they'll default. They'll say, okay, you do whatever you want. So usually, you know, when they understand it is something beyond their control, because this is an external event, that external shock that came to them, what the money lenders did was to simply say, okay, we will postpone the collection of the loan, whatever it is. We will not give new money because none of them had the new currency, and wherever they were able to collect the loan, they collected it. So, you know, it's not always that the 1,500 rupees were what. Sir, go on, yeah. Sir.
Taxes properly. So when the government had the objective of wiping out people who had lack money, so what problems did they face, the money lenders in that sense face?
I think anyway it's beyond the tax net. So
I don't think they faced any problems unless somebody was storing 100 crores. Look, the government still allowed deposits. Of course, they were not able to withdraw. They had to, all those who had 500 and 1000 notes faced a little bit of inconvenience, because one, they had to take those old notes and deposit it. That was one inconvenience that they faced. Then withdrawal, once they deposited it, the withdrawal was an issue. So slowly they would withdraw it. But very often what happened is, if they really wanted to carry on the business, a lot of them did not want to carry on the business because there was uncertainty. Whenever there is uncertainty, the businesses would not want to take a risk. So they were just waiting, and some of them who were really keen on, you know, lending it again, if it was black money that they already had, they simply gave a commission to the banker and exchanged the money. So many cases. In fact, some financiers were actually telling us that the bankers were inviting them. You know, see, if you know a good party. Now the fantastic part of it is you have the formal banking sector, the bankers actually telling financiers, if you know a good party, bring them, we will exchange it, and they can give us our share 3-4 months time, no problem. But you have to stand guarantee that that guy will actually give me my commission. So that kind of thing happens. So look, that's the whole problem. You know, the government thought, I think basically the whole problem was the government does not understand the informal sector's dynamics. So you ban it, it's thinking that the people will simply follow the rule. They don't understand that the innovation, I mean, informal sector can be quite innovative, and even people who work in the formal sector always have an informal bent of mind. So you know, they can also, they found that's why, you know, in most of the cases, I mean, how many cases have you had, how many cases have you seen where the elite of the city went and stood in the line. Any city, they didn't, because they have their own backroom ways of changing the whole thing. So, and it happens. So I think in Facebook or something, you've had some politician's daughter carrying huge chunk of money. So yeah, it's all the 2000 rupee notes and need 20 lakhs or something. Now it's easier also to carry, 2000. So yeah.
Make some brief comments. So one I thought was just to reiterate, I think it was a role of financial intermediaries and role of credit, just to go back to what we studied in the circle of flows income and the importance of that. The other is also partly the role of power. Enforcing that. And I think as Ananth was saying, I think it's really important to understand the Indian economy. And the informal sector plays an extremely crucial role there. So policymakers having an inadequate or incorrect understanding of the economy can formulate policies which are detrimental instead of being helpful. And I think at the core of it is also, why do we think that formal is better than informal? And these are open questions that one has to engage with. And I think finally, I think what Ananth has listed, there are some interesting things which you can explore for honors projects. I think with this, let's thank Ananth for coming here.